So, the big question is this: how are ambitious people like us, who don't have a lot of resources, did not go to Ivy League colleges, were not born into wealth, how do we become resourceful enough, use our creativity, our dedication, and a little bit of crazy to bootstrap our way to realizing our dreams? Whether it is launching a new company, launching a new app, or making it to the top of the corporate ladder. That is the question, and this podcast will give you the answers. Please like, share, and subscribe to get new episodes, videos, and other updates. Hi, and welcome to this new episode of Bootstrapping Your Dreams Show. I'm your host, Manuj Aggarwal, and today we'll be talking with a quirky entrepreneur, Jefferson Lilly. Jefferson has a Bachelor in Economics from the University of Pennsylvania and an MBA from the Wharton School of the same university. However, when we say that Jefferson is a quirky entrepreneur, it's because he has chosen a business opportunity very few people look at as such. So Jefferson is a mobile home park investment expert, and we'll find out what that means. Welcome, Jefferson.
Great. Thanks for having me on your show.
Yeah, we are excited to learn about this new opportunity. So from what I understand, you have spent 9 years in sales leadership roles and several venture-backed startups in Silicon Valley. And you became a full-time investor, raised $10 million through podcasting. Is that true? You raised $10 million through podcasting?
That's certainly about right. I mean, we ask a lot of our investors. I've raised money cumulatively now from about 160 folks. I've raised almost $30 million. Wow. And a lot of those folks say that they found me off my podcast.
I see. All right, great. So let's dive in and let's talk about this unique business opportunity and how you found it and the whole story behind it. So tell us a little bit about this mobile home park industry.
So I had, as you mentioned earlier, I had spent about a decade, basically most of my 30s, working for various high-tech companies in Silicon Valley. I went through the dot-com boom and bust, and frankly came out of it really looking more for value investing rather than to continue to do high-tech, biotech, solar tech, silly tech. Yeah. So I had already been a very small Berkshire Hathaway shareholder, big fan of Warren Buffett and value investing. And basically I started looking to make value investments, both in the stock market and then a couple of years later in real estate. And I looked initially thinking I would buy an apartment building. Yeah. And just in researching multifamily, I came across mobile home parks kind of by accident. Okay. But they are a quirky niche. Yeah. It's a very profitable business. I like it a lot better than really any other niche of real estate for several reasons. So I got into it again, part by plan and part by dumb luck.
Awesome. So how did you look at this opportunity? Like, I mean, most people, if they look at a real estate, they won't even think about, this particular niche. So tell us, how did you, I know it was an accident, but give us a little bit of a backstory about it and how you actually pursued it and against the conventional wisdom. So that, our audience can also understand how they can replicate your innovative ideas in whatever domain they are working in.
Yeah, you definitely need to be comfortable thinking outside the box. Yeah. Again, I live here in San Francisco. This is the land of technology. Anybody that might be doing real estate would be doing some more normal kind of real estate, like selling, 1,000 square foot, 3-bedroom, 2-bath starter homes for $1.5 million. Yeah. That's the kind of real estate that the Bay Area is known for. So I definitely got some unusual looks when I told people I was buying a mobile home park. At least here in the Bay Area, I got some unusual looks. But I did have, I don't know, maybe 1 in 10 people that I mentioned this to that said, hey, I might be willing to invest. And I had, for instance, one guy just tell me like, oh, that's great. My dad owned a park, and that was what sent our whole family to Europe every summer for a nice vacation. Here's my dad's phone number. Give him a call. So I went about seeking out people that were in the business to give me advice and to basically run deals by them and get their input. So I built really an unofficial advisory board of about 10 guys that had been there, done that, and they helped give me guidance on deals as I was looking at them. It took me from the time I first got interested in the space until I closed on my first deal was about a year and a half.
Well, that's not bad.
Could have done it quicker now, knowing what I know now.
For sure.
But anyway, it was just a good learning experience. I read books and tapes, and I just did everything I could to learn about this niche.
Awesome. And so, just to get a little bit more understanding, so you basically buy a lot of land and then you rent it out to mobile home people who want to
Yes.
sort of park there. Okay.
Yeah, this is effectively a parking lot business.
Okay.
We don't own probably 90% of the mobile homes. We don't own. Those are owned by the residents.
Okay.
They are parked on our land really permanently.
Okay.
These are not RVs. They do not have engines in them. They are tied down to the land and have permanent utility connections, water, sewer, electric, gas.
I see.
But yeah, so we really look in the long run to own just the land. We will buy some houses and bring them in and write mortgages on them and help lower income folks become homeowners.
Okay.
So we do expand the supply of affordable housing. We'll also fix up many dilapidated mobile homes that often come with the land.
I see.
But in our long run plan, our residents own all those homes, they're homeowners, and they just pay us the rent into the land.
Awesome. And so it's almost like buying a rental apartment building, if you will.
Similar, except I don't have any leaky toilets and leaky roofs to maintain.
How come? Is it not the similar kind of maintenance that you need?
Well, again, the tenants own those leaky toilets and leaky roofs.
Got it.
So it's their homes. And frankly, when folks become homeowners, they tend to take better care of their property.
For sure.
So it's really a win-win for everybody. If there is the proverbial leaky toilet, a tenant can go and get a flapper for, $12 at Home Depot and fix it themselves, whereas it would cost me $120, 10 times to get a plumber to show up and take care of it.
Sure.
So tenants become homeowners. They do pay the lot rent. That's typically more around $300. But that's a big savings once they own their house from what they were paying, perhaps, upwards of $900 or $1,000 to live in what would likely be a smaller apartment. And of course, you never build up any equity. You never have any ownership. You're just throwing your money away if you're renting.
Sure.
So we help people become homeowners for less than what it costs them to remain a renter.
Wow. Okay, that's awesome. And from what I understand, there's a very good, handsome return on investment here, is it?
Yeah, we like it. We're typically able to generate 10% cash on cash initially. That may grow to upwards of 20%. It depends on the deal. It depends, again, how many homes we bring in to expand affordable housing. But yeah, it's still a very profitable real estate niche.
That's great. So tell us a little bit about your early days. Like, did you have success right away? As you said, like you closed your first deal after about 1.5 years. But how did that deal go? Was it a success overnight, or did you have any challenges earlier on? Tell us a little bit about that.
Yeah, so I still own that property. It's still cash flowing nicely. That's in the Oklahoma City area. So yeah, basically that deal has continued to do reasonably well. None of these are going to be like a high-tech startup. You're not going to, make 100 or 1,000 times your money in a year.
Yeah.
You're also not typically don't have anywhere near the sort of default and bankruptcy rate that say high tech investing does. Again, speaking as somebody who spent a decade at 3 different startups. So yeah, this is just good, stable cash flow. Mobile home parks tend to do well both in good times and in bad.
Mm-hmm.
And so again, we just really like the niche and help other people invest through our funds. We all become co-owners in the parks, and we all cash flow, and we're all helping to expand the supply of affordable housing. So
that's great. And then how did you discover share with us the accident that you talked about? How did you discover, like, did you live in a mobile home, or how did you discover this niche? Because I mean, the reason why I'm asking is, you come from a prestigious business school. You're in the heart of the Silicon Valley, which is in contrast to the mobile home industry. So what I really want to understand is how people can be more self-aware and look at these opportunities and learn from your experience in doing so.
Well, yeah. So when I was first looking, again, I was thinking I'd buy an apartment building, and I was just looking at several websites. One of them was LoopNet, which is basically an MLS service. Okay. So just in filtering on the website for multifamily, I'd see 99 apartment buildings. There'd be one mobile home park priced better, lower. And, honestly, I initially thought, that's absurd. I'm not buying a friggin' mobile home park. And I deleted the search, but, did it again and again. And whether it was Lubbock, Texas, or Ames, Iowa, or Omaha, Nebraska, there was always this, quirky little niche. 1 in 100 of these multifamily properties were mobile home parks. Again, there'd be 99 apartment buildings.
Okay.
But that was really it. I just kind of discovered it a bit by accident and then started researching it.
That makes sense. All right. So now tell us a little bit about your podcasting and blogging experience, because apparently, you have done it very successfully and you have leveraged it to grow your business. So tell us a little bit about that.
Yeah. So I started the industry's first podcast. It's called Mobile Home Park Investors. Oh, wow. Folks can find it on iTunes or Stitcher or any number of other outlets. Sure. We've also got a website, same name, mobilehomeparkinvestors.com. Mm-hmm. That also links people directly to the podcast as well as to our group on LinkedIn. I run the biggest group on LinkedIn that networks mobile home park deals and management tips and whatnot. Anyway, so I just started because I had actually been on a couple of other podcasts as a guest. Yeah. And then I just got to thinking, hey, I should do this on my own and start it up for our industry. So I've now been on, I don't know, probably 60 other podcasts like yours. And I've done 120 some odd of my own podcasts. Oh. And so again, I have people that call or email, I would guess roughly weekly, that say, hey, I've heard your podcast, would love to consider co-owning parks with you and investing in your fund. Let's talk. Oh. So anyway, so that's kind of how it's come about.
That's great. So not only you are growing your business, you're also sharing your knowledge through your podcast and other.
Yes.
Things. Awesome.
Yep. So I also get emails a lot from people that have just said, hey, thank you. I've actually bought a mobile home park because I've listened to your podcast. So that's been it's been a lot of fun. I just had a guy at the Berkshire Hathaway shareholders meeting a month ago track me down and said, hey, I bought a park and I listened to your podcast, and that's why how I learned and why I did it. So it's humbling to see other people's lives and financial futures improved because they've listened to my podcast.
For sure. So is this a growing industry? Like, is it a huge industry, or is it like a very niche, as we called it, a very niche industry?
Yeah, definitely niche. I would suspect, again, there have to be 100 apartment buildings for every one mobile home park. Best guess is that there are about 50,000 mobile home parks here in America.
Okay.
And this is mostly an American phenomenon, but there are some up your way in Canada. I've been into a couple over in Europe where they call them static caravan parks.
Okay.
But it's mostly an American phenomenon. But yeah, I would say 50,000 mobile home parks is, dramatically smaller than what would be millions and millions of apartment complexes, let alone, 100 million or more houses.
Okay, that's great. So related to that, will you recommend, let's say, we have a lot of first-time entrepreneurs or aspiring entrepreneurs in the audience. So if they're looking to start a business, will you recommend them look for a small niche and be a big fish in that small pond, or go in a big pond and be a small fish?
I don't know that it's quite black or white. That this is definitely a smaller pond, so to speak.
Yeah.
Certainly relative to again, apartment or hotel or office space or other basic food groups of real estate, as it were. So I guess I'm a big or at least medium-sized fish in a smaller pond.
Yeah.
I like it.
I'll take it as a yes, then, I guess.
This works for me.
Yeah. Okay. So now tell us, you had a good amount of success in this business, and now you expanded it by sort of offering other investors to come in and partner with you. So tell us about that. Like, how did you make that decision? Why didn't you just go on your own and sort of captured the market? Tell us a little bit about that thought process.
Yeah, so I both have partnered in the past. My current fund is just me. There's no right or wrong answer. My previous partner and I built up a good business, but then had some differences, different opinions of how to manage the properties going forward.
Yeah.
So I'm now doing my own fund, same sorts of deals, size, acquisition, same strategy, and keeping operations in-house. So again, no right or wrong answers there. I've invested again both in partnership and alone.
Okay, but right now you do accept external money to partner with you, or is it you only invest your own money?
Oh, no. I'm actively raising money, soliciting. Yeah. So I've raised about $7.5 million now since the first of the year.
Okay.
And that's been from approximately 50 individuals.
Awesome.
So we're actively raising. I say it's co-ownership of properties. I take no fees. I split profits with my investors. They put up the capital. I find and manage the deals, even personally guarantee the bank debt. But my partners, again, are passive investors now. They're limited partners. What I was mentioning earlier was that I had a general partner in the partnership as well.
Got it. And so, I suppose, like, you have properties across the U.S.
Yes, we are coast to coast. Most of our properties, 85%, are in the Midwest. We've got a fair amount in and around Kansas, Oklahoma, up into Wisconsin. But we do own properties in Spokane, Washington, and also over in Raleigh, Durham, North Carolina. So we are technically coast to coast.
So how do you manage these properties? Like, do you have people taking care of these properties, or or do you visit them yourself?
Both. So all the properties have an on-site person, an on-site community manager.
Okay.
We then have a regional manager that oversees them, coaches them, makes sure they're compliant, keeping the parks clean, obviously collecting the rents, overseeing moving in mobile homes. Anyway, and then those regional folks report up into me. So we've got a couple of folks, and then I still try and get out and see the properties about once a year.
Sure. And what role does technology play in this industry? Like, do you have systems that you use, software tools, and things like that, or is it pretty much old school paper based systems?
Not old school paper. That would just be too difficult.
Uh-huh.
So we use a rent accounting package called Rent Manager.
Okay.
It's in the cloud. Our managers at the community level can log in, log a payment. We at headquarters can see whether that payment has come in or not. So that's how we do most of the rent accounting. We make extensive use of Dropbox. We upload leases. We upload photos of houses, documenting repair work, other things up into Dropbox. We make extensive use of email, some texting. We also use a Slack, that software for exchanging
for sure.
messages as well. So anyway, that's just some of the technology that we use to manage properties remotely.
That's great. And now, being in this niche, we cannot avoid but talk about this aspect of social responsibility in this business. So, you also said earlier that you're providing housing at a low income level. So, tell us a little bit about that. Was it a motivation for you to enter into this niche as well?
Yeah, that had always been on my radar screen. That's a great way to both make more money and do the right thing socially.
Yeah.
Our average resident probably makes about $35,000 a year income. Manufactured housing is really their only path to becoming a homeowner. So anyway, we help folks, again, become homeowners. I've had some folks even thank me as they've left a couple of the parks and moved on to own regular site-built houses. They've said we helped them get out of the game of paying rent in an apartment building, used us kind of as a stepping stone to then move on to own the home and the land. Anyway, so that's also encouraging to hear. But there's just no shortage of demand for affordable housing, and we help provide that.
That must add a lot of satisfaction to the work that you're doing.
It does. Yeah.
Awesome. And now, all businesses carry a little bit of risk, but as you enter into an unknown risk niche or something unusual, there's a heightened sense of not knowing what's going to happen. So, did you have any apprehensions as you entered into this niche?
Not really. I again had done. I thought all that I could to get wiser about the niche, and again had built that advisory board of folks that were park owners. So at some point you've just got to jump in, whatever your niche is, whatever your business is going to be. At some point, we all have a first day on the job. Anyway, so I think I learned as much as I could have prior to getting into the business, and certainly I've learned a lot more now. But I wouldn't say I really had any apprehension about it. No.
So basically, the message is be well prepared and just dive in, and things will work out.
Yes. Luck favors the bold, or fortune favors the bold, something like that.
Awesome. All right. Thanks a lot for such a great interview. Now, you've been a very sort of inspiring entrepreneur that we have on our show, looking at something, very unusual. I'd love for you to give some advice to aspiring entrepreneurs, like what should they do to get things off ground, or what should they look at in preparation for their entrepreneurial journey?
Yeah, so I think whatever your niche is going to be, it definitely helps to have an advisory board, peer group, call it what you will, but people that have been there and done that. Even if you're doing something completely different that nobody has ever done before, you're still going to have issues around marketing, hiring, human resources, financing. So get help, get advice from folks that have experience. And you'll blend it. You may not do exactly what any of your advisors say 100%, but again, I think that that's a pretty key thing to do, no matter what niche you're going to become an entrepreneur in, is find people that have been there and done that and can advise you on how to do things more quickly.
Yeah, don't reinvent the wheel and don't try to do everything yourself, right?
Don't make the same mistakes someone else has made. Go make all your own new mistakes.
And then pass it along to others.
Yes, pass it forward.
Yeah. All right. Anything else that you may want to share before we talk about your company and your services?
No, I think that's been a good overview.
Awesome. Thank you so much. It's been such an interesting topic and thank you so much for sharing it openly. Now, before I let you go, can you tell us a little bit about your company and how people can reach out if they want to invest?
Sure. So the company is Park Avenue Partners, and the website is simply parkavenuepartners.com. They'll find a wealth of information there, a recorded webinar, some shorter materials, shorter to digest materials to download. Anyway, so just come to parkavenuepartners.com. You'll be able to contact me there, ask whatever questions you have, and again, get the private placement memorandum, a webinar, and other information there. And again, we'd love to co-own mobile home parks with folks. They do need to be accredited investors to invest, and the minimum is about $50,000. And again, we're targeting upper single-digit cash returns, and then some larger payouts towards the end of the fund when we would be liquidating. So we think folks will probably get low to mid-teens IRR, compound their money 13 to 15% a year by co-owning parks with us.
That's about what Warren Buffett achieves, isn't it?
Well, at least what he used to when he was smaller. Yeah.
All right. That's great. Thank you so much for a very interesting interview. I'm sure everybody got a lot of value out of it. Thanks.
Yep. Thanks for having me.
So again, I'm Manuj Aggarwal, and thanks a lot for joining us on Bootstrapping Your Dreams Show. And now, if you are an existing or an aspiring technology entrepreneur, then I invite you to check out my new online workshop, Bootstrapping Your Tech Startup Dreams. Go to go.tetranoodle.com/boot-podcast and sign up for free. I want to make sure more successful and sound decisions are made every day in your tech projects. Let's start finding solutions to your problems. So go to go.tetranoodle.com/boot-podcast, and I look forward to helping you with your tech startup.